Welcome back to another episode of War Room Huddle Podcast, an RFG advisory podcast for independent financial advisors who want to crush everything and take their A game to the next level. Brought to you by RFG Advisory with your hosts, Shannon Spotswood, Bobby White, and Rick Waddell. This is War Room Huddle.
Welcome. We are so excited to have you join us for our very first RFG MasterClass for advisors. This is going to be amazing.
Yeah.
We are joined today in our podcast studio with Zane Tarence.
Hey, everybody.
Welcome, Zane.
Thank you, Shannon.
You all are in for a real treat. We laughed. We left the coffee cups on the table because Zane and I can basically blow the roof off this building with our energies. So we thought we'd come fully caffeinated and bring the heat. The goal of today is really to be educational in nature and provide a tremendous amount of actionable items for advisors. So first up, Zane, I'm going to introduce you to our audience here. You are a managing director at Founders Advisors, headquartered here in Birmingham, Alabama.
That's right.
And Founders is a middle market boutique investment bank. We love our lingo in our industry, so just everybody is clear of what that means. Middle market investment bank. They focus on companies valued between 25 million and 300 million. And they are a boutique investment bank, which in my mind is really the place to be because it means you have expertise in a certain number of verticals. You're not trying to be all things to all people.
Right.
And the verticals that Founders concentrates on, let's see here. You've got consumer, you've got biz services, you have energy, you have healthcare. Let's see if I can get them all. And technology.
Technology. Come on.
And Zane runs the technology practice for Founders. So he's really sitting at the tip of the spear of probably one of the most explosive in terms of growth and one of the most exciting verticals within Founders. You've been out this for a while.
I have. I'm getting old, Shannon.
No. You're not getting old, but you've got a lot of experience under your belt. You've worked on just personally leading more than 100 deals over 20 years. You probably put several hundred more on the board that you've been a part of.
It's been fun, yes, and in all different structures. It's been a fun ride, and of course, I was on both sides of the table. Right. You know, I was an owner as well.
Exactly, and that's one of the things that I think really differentiates you for this conversation. Is that in addition to being an investment banker, you're a serial entrepreneur. So you've built a couple companies on your own. You've sold a couple companies. Right. You're just like absolutely fearless in terms of disrupting your industry. So you founded, I think, a really game-changing conference called Silicon Y'all.
Thank you.
Where he's focused on bringing together and really highlighting in the Southeast, holding this in the Southeast, all this incredible talent and companies that are being built here. That's been just a home run for Founders.
That has been huge for us. And thank you for mentioning that, Shannon, because that is for this underserved market in the South. You know, people don't know really the type of talent and software companies that have been built in the Deep South. There's a lot of talent, and that has been huge for our business.
And if that wasn't enough, founding companies, running, the technology practice at Founders. You also are a published author. Congratulations.
Well, thank you.
You wrote the book, 17 Reasons Your Company is Not Investment Grade and What to Do About It. We're going to get into this and why you wrote this book later on, but it's just so cool that you took all of that feedback and actually put it on paper to really help your clients realize their dream, which is ultimately selling their company or acquiring another company to get bigger.
That's right. No, thank you. And boy, I appreciate this introduction. I'm very, very, very grateful for my mom sending you all this, Shannon, because I think you have the highlights and not some of the failures, but
hardly. You also are the father to three
beautiful I love
girls.
That. Yes.
3 beautiful girls. And I'm going to tell you a sidebar really quick for all the advisors out there, because I think this is so important. I remember the day you came into our office and the bulk of your wealth is invested in companies and all the businesses that you're building, and obviously in private equity. And you said it's really important to my wife. It's really important to my wife that I build an investment fund that is earmarked for our daughter's weddings.
You are right. She knows as an entrepreneur, that money, I flow between things all the time. She said, Zane, I really want, because wherever you are in your business career, my wife likes really nice Southern weddings. And so, yeah, and that wedding fund has grown. Y'all have done an unbelievable job with that wedding fund.
Well, I just think it's important because it speaks to the emotional attachment to what we do as an industry, and recognizing that even when you're a serial entrepreneur, you still got to have a wedding fund.
Absolutely. Absolutely.
So 3 girls, his wife, Jamie, is an absolute powerhouse and business owner in her own right. She has one of the most exciting omni-channel content platforms called Family Savvy. So she's built her own business, and lucky for all of us at RFG, you are also an RFG board member.
One of my favorite roles. Well, love it. Being able to watch this firm grow, the platform for advisors to build a practice. I love it. Love the culture, the team. It's authentic. It's real, and that's what life's about.
It really is, and. We'll save it for another day, but having a high caliber advisory board like we do, and the time and attention that you all pour into it, that we pour into it, we really would rank it as one of the top 3 most important things that we've done as a firm, is leverage and lean into an advisory board that has, talented, amazing people just like you on it.
Thank you.
All right. So I bring that up about our board because that really is the genesis of what brought us to this day. So we're sitting in a board meeting and we're talking about just trends in the industry and growth in the industry. And our advisors have had this phenomenal year where they've seen, north of 30% growth on average in their practice. And you said during the course of that conversation, one of the greatest opportunities for growth for advisors is working with business owners before the liquidity event. And most advisors really don't have a seat at the table. And I actually wrote it down because you called it, and I love this. Okay. We should have titled the webinar this.
Oh, yeah, I like this.
You called it a honey hole, for advisors to prospect. So here we are. That conversation led to us going back and forth a few times, and we decided we didn't want to just do this as a one-off. We wanted to create a series of an educational series for advisors. So this is welcome. You're our first guest.
Thank you.
On
Love it.
RFG MasterClass for advisors. And this just isn't for RFG advisors. We're really designing this for advisors in the industry because we believe very passionately that iron sharpens iron. We all get better when we level up.
Absolutely. And Shannon, I love this. And I've got to say this as a, practice builder myself. Most of my companies have had a professional services piece of them. And I think finding the right markets where you can differentiate yourself, find that persona to where you can add incredible value, I think that's the difference maker in growing a practice and not. So I really am super excited about this group of people that I think your advisors can win with and can differentiate themselves with.
Yep, completely agree. All right, so set us up here. Let's just first talk about the landscape. Like, what are we talking about in terms of this opportunity set for advisors? So give us some numbers.
Sure.
Give us some context about the amount of wealth and what this really looks like as advisors start thinking about this as a niche. I hate to even call it that.
But hey, but the riches are in the niches. So yes, and I love data, and God we trust, all others bring data. And so it's about the data. This is real. And Shannon, I think we talked about it. I think we all know there's about 28 million businesses in the United States. Of those businesses, 12 million are owned by baby boomers. And I'm just saying that because this is about life stage. Y'all, these owners, sometimes they really do not know what their options are. They built a good operating company, built a business, but they don't know the next season of their life. And a lot of them are spending time with coaches, even spiritual coaches, with their family members, with their wealth managers. And some of them, y'all, this is new wealth. Y'all have the opportunity to get in there. It's not like they're embedded, because some of this wealth's been created very quickly. And last year alone, 2021, the year we're in right now, of course, a big year because there were some tax concerns, but about $145 billion in liquidity in the U.S. with businesses between $0 and probably $200 million. Y'all, our little bitty firm, I mean, I want to be useful to y'all today, so I'm going to be very transparent. This is a safe place. I know y'all are my friends, right? Now, I'm a broker-dealer like y'all, so, got to be careful. But I can tell you this. Our little bitty firm with 40 professionals, we unlocked about 980 million of that. So about $1 billion of the 145 billion in that space got unlocked. And so we have individuals, families. These are private businesses, right? Of all the companies, about 6,000 publicly traded companies. So these are all private companies had that type of liquidity. And this is going to grow because of the baby boomers. There's so many baby boomers. And again, that's the season of their life. So I think this market is huge. The liquidity's there. What do they do with this money? So many owners, when I'm talking to them, they start thinking through this and they go, wait a second. I'm going to have all this cash that was illiquid. What do I do? And the first thing we say is stay rich. Find an advisor to help you stay rich. So unbelievable environment. It's going to grow. We think next year it might be down just a little bit, but okay, $135 billion. And so huge opportunity to be there. And I like what you said. It's having a seat at the table. You don't want to be too late. Too late is not a good word. So how can you position yourself as an advisor to be there with that business owner when this liquidity event happens? And y'all, it's going to happen. And these are speeding up because of the optionality. So.
Well, it's interesting. You've got a whole team of, baby investment bankers cranking out data, but right. I'd love to see the numbers. I mean, 145 billion, you talk about 12 million businesses still owned by baby boomers. I mean, this is a 15-year-long trend. And when I say honey hole, definition of honey hole, if you're a fisherman, it's something you can go back to over and over. We're not talking episodic. Yeah, you can build a practice based on some episodic things. We're talking about sustainable growth here. And that's where we want to talk about investing, because it's going to be giving over and over again. And even when these baby boomers, I tell every one of them, you're going to exit. One way or another, you're going to exit. We're all going to die, right? And even if they're transitioning this business to their key team members or their family members, there's so much liquidity because private equity groups and financial investors are doing management buyouts. They're giving the capital to the younger generation to buy out the older generation. So this is happening. It's not like, some people do this. No, they all do it if they've built an investment-grade company. Right. That's the book.
Right.
That's the book.
Right.
Well, and this is really, part of that conversation we were having at our board meeting is that it's this huge opportunity. And one of the comments that you said was, it's amazing to you how few financial advisors are included in that conversation before the liquidity event. The advisor's really not showing up at the table until the liquidity event, and you've given them this advice, you've got to stay rich. And they're like, all right, who do I know that's an advisor? Right. This is why we think this is such a critical conversation to be having today. So let's, give some insight for advisors out there about the number one question you are asked by company owners. What do they want to know?
Right. And boy, that's a good question. And it's simple. How much is my company worth? There's so much data out there and information, but these business owners way deep down, and this is a personal question. They can't talk about this with their employees. They can't talk about this a lot of time with their family members. They're like, how much does it work? Dad, Mom, what am I going to get? It's a personal question. And that's the reason as an advisor, if you can get in there and be able to have this conversation, you're at a unique position with them. But is this asset really worth something? Is their first question. And then their second one is, if it is, what do I do to prepare myself to be in a position to take some chips off the table? What do I have to do to qualify for an institutional sale? And that's what we love as bankers, Shannon, because we get involved typically 3 years before our clients ever transact. But like we always talk about, laugh about, whoever educates wins. If we can be at that table and help them understand, here's what you can do to make your company worth more. Here's how you would trade right now. But boy, there's some things you can do that can really move the needle. They are fascinated with this conversation. And Shannon, you have to interrupt me. You know I get on a roll. But the other thing they love about this, it makes them a better company to own and operate. Even if you say, I'm not going to transact for a while, they love having this conversation because they want to be institutional grade. They want to be something everybody wants, because who doesn't want a company with more cash flow, more freedom, better culture? So it's a conversation they want to have. They don't have it with many people because it's sensitive. And can I tell you something? You'd be surprised. I think you would. Do you think most owners think their business of these kind of companies between 25 million and 300 million, private companies that most of them built, built on their own, right?
These
some
are
of
their
them,
babies.
These are their babies. Some have built them and some of them bought them and made them better. But do you think most owners think their businesses are worth more than they really are, or less?
I would guess less.
Absolutely. Absolutely. And in that board meeting, you ask, hey, should we really be tracking the wealth as a wealth advisor when you're going through their wealth and their planning? Should you look at their business asset or say, that's kind of, who knows? Let's keep it at zero and figure out if it's up or down. Listen, most of them are conservative, and in their minds, they're not giving it as much value as it's actually worth. So that's what's going on. Huge opportunity. They want to know. They're curious. They read about it and stuff. And if you can be a resource and you can show them you really care about this, and it is a part of their portfolio, I'm telling you, you'll be there to help them prepare, and then you'll get that capital.
It's interesting that you said 3 years, that there's a 3-year ramp. So that's a good way for advisors to kind of frame up. Everybody's oftentimes looking for that, like, I need the silver bullet. I'm going to buy the software that's going to drop leads in my lap, or I'm going to have the, automated content, all that stuff's, interesting and important. But there is a realization here and a recognition that this is an investment.
It is.
This is an investment, especially if you start having this conversation, which is why I think your book and why we kind of, this is going to be the swag for this event,
man, thank you.
Is because it helps advisors start to have that conversation, because that's my next question. So you've recognized, whether it's in your town or in your practice or, nationally, what your interest is, this group of potential business owners.
Right.
And you realize that you're going to have to invest some time in forging the relationships and having the conversations, going on that journey with them to become investment grade. What are some questions that advisors could ask their business owners to get the ball rolling on this? So they,
great point.
How do they even start?
Great point. And Shannon, I've had the opportunity, and I'm so excited we're doing this because we're going to get more formal in this and do some testing with y'all. But I've had the opportunity to watch some practices across the country, large practices that kind of have done this. And the good news is too, even though this is a long-term game, it might be 2 or 3 years, right? This target market has money to invest right now. So it's not like, 2/3 of all the affluent families in the United States are business owners, like we talked about. So it's not like you're waiting for a liquidity event. So, to be able to get some money under management, you're going to be able to win them over and get started. Okay. But here's the deal. You need a team. And I've noticed, in the RFG advisors, you're really good project managers, quarterbacks. You know how to work with other professionals, estate planners. And remember, 90% of all wealth is in estates, right? So estate planners, attorneys, CPAs, tax attorneys, bankers, insurance professionals. Around these type of transactions, lots of reps and warrants insurance, lot of business. Here's the beauty, Shannon, and what I would do if I were building a wealth management practice. I would have a team of attorneys, CPAs, insurance professionals, and a banker that you're close with, because that team can provide so much content to that business owner. You be the quarterback for that business owner then to channel them content about new tax strategies, about new approaches to charitable giving. If they have a give, they want to really give some of their stock. You be the content funnel. You don't have to be the source of all this content. You need to be the quarterback. Show them you're interested. Now, why do attorneys and bankers like me and CPAs, why would we love to equip you as an advisor to help that business owner? Because I want a seat at the table, right? And so it's whoever takes the relational interest to say, I'm going to be the source and the resource for that target market. And then you can truly add value and ask these questions. Have you thought about what your company's worth? Have you looked at, are you aware of all the different options to take a few chips off the table? If you owned, $25 million of Amazon stock, you might want to sell 2 million of it. Did you know that really good institutional grade companies in your business, engineering services, manufacturing, you could sell 20% of your business so you could diversify your wealth? Did you know you could do a debt recap? Once you can have that conversation and you're the one that business owner was looking at when they got that
aha moment,
yeah. Guess what? You deserve their business. So Shannon, it's what you're worth. Have you thought about these deals? Have you thought about having that much of your wealth in a risky asset and you're concentrated? This is a lot riskier than Amazon or a publicly traded stock because they're a private company that trades at a higher amplitude than a public. So if you can open that conversation with them, channel them data, every professional like me, we will equip you. We will give you free data. We will do a valuation for them. So help them understand, hey, we're looking at your portfolio, but this private company is a big piece of your portfolio. It's dynamic and it matters. And we care for that, even though we're not charging you a fee on it. We care for that asset.
I love this, and I'm going to take what you just said and split it into two parts because this is so interesting. So the first was you touched on the different avenues of liquidity that companies can pursue, because oftentimes companies think my only exit strategy is I'm going to sell 100% of my firm to my biggest competitor.
And that scares them to death.
Right? They're like, I hate that guy.
I hate that guy. I'm not going to show him my data. How would I ever get through diligence? So they say no.
Right. Okay. So question one.
Okay.
What are some different pathways that companies can take to monetize a part of their wealth?
Gotcha. There's really 4 key categories, and they have pros and cons, and there's subcategories in all these. But if you're an investment grade company, there is so much activity. Y'all, I think the last time I looked at it, 20% of all wealth, y'all are the wealth managers, could talk to you and Rick about this, of high net worth individuals is vested in private companies, right? Through private equity groups. So there's so much capital available for these business owners. So the first way is a debt recap. If you've got good EBITDA, you can go borrow money, take that money out of your business, and the business pays for the debt, right? And you can reinvest that in your stock portfolio, apartment complexes, get diversified. I mean, it is very scary. Oh, and by the way, of these self-employed business owners, guess how much of their wealth is typically tied up in their business? If they got a market valuation, guess how much of their wealth?
90%.
90% of their wealth, because some of them have, 2 million, 3 million, maybe if they've had a good little business grow. But literally, I watch it because they pay payroll. They've done all this stuff. Like me I always tried to keep my retirement separate that I can never touch, because as an entrepreneur, I'll go back and get that money. I got a good deal. I'm a riverboat gambler. And so I'd end up and just like the wedding fund. My wife knew we had retirement, that I said, I'm going to be okay in retirement, but I risk, and my money's not liquid, right? But now when you get my age, I start saying, okay, this is scary. But y'all, they got to know this. So,
debt recap.
So debt recap, minority recap. There's all kinds of ways people will come. People say, well, if you sell less than 50% of your business, what we call a non-control sale, little less valuation. But we say, wait a second, they're going to want to put that on the balance sheet, those investors, so you'll invest it in your company. Wrong. If you've got a nice business, they will buy literally all that in secondary funds, primary funds going to the balance sheet, secondary going to the owners. They will buy 10%, 20% of your business. And we've got investors all over the world. And about 19% of our deals last year were foreign deals. We've got capital all over the world coming to the United States right now because of rule of law. Yeah. They can do it. So they can sell 20%, just like they can sell 20% of their Amazon holdings. They had no clue that was possible. The third option is probably we see happening more and more is a majority recap. This is where you have your cake and eat it too. You could sell anything over a majority, 55, 60, 70, but you still can hold this other piece. Y'all, this is so important for advisors. Yep. the second bite of the apple
Yep.
is typically bigger than the first bite. In the 100 deals I've done, I've already had the blessing of seeing about 70 of those have their second bite of the apple. And guess what's happening with the second bite nowadays? It's getting sooner.
Yep.
It used to be 5 years, 6 years, because the private equity investor wanted redemption rights so they could return their capital to Harvard's endowment fund or Metropolitan Life. Now that second bite is happening sooner. My average, the last 3 years, the second bite of the roll, let's say I sold 60% of my $100 million company, so I got $30 million liquidity. I kept 40%. The average I've seen return on invested capital of their roll is 4.7 times. Wow. So then they have another lick, okay? And they need advisors to say, okay, I got another liquidity event coming. And the financial advisors that I see that are working with their clients that still own some of their company with private equity, they're managing that mark-to-market valuation every year. They're thinking about it. They're planning for their trust, the money. And I'm telling you, the financial advisor is the one that should be quarterbacking this. The banker comes in at the transaction. The attorney comes in to memorialize it. So Shannon, that's the third one, majority recap. And the fourth one is an outright sell. Right. You can sell 100% of it, and there's all kinds of ways to get paid, cash, stock. Guess what? I just saw this. One of my clients got about 20% in a publicly traded stock. Well, don't they need a financial advisor to say, wait a second, you've got this stock, you've got a collar for 6 months. Let's really manage this. Do we need to hedge against it with some options? What do we do when it comes to, we want to sell part of it? How do they do this without a river guide? And that's where they don't know what they don't know. But if you're at the table, it's the gift that keeps on giving. I have seen basic little Bubba businesses and Bubette businesses produce hundreds of millions of dollars in liquidity over a 5 or 10 year period. And the financial advisor that's at the table is the quarterback for every bit of that. Sorry I took so long, but I love this.
Okay, so the second part of my question, you started touching on it, which I think is really interesting and important and reinforces this message of diversification, is how do financial advisors approach building the financial plan for these clients? Because they kind of want to, like, you've got this big asset, we're not going to really touch it, we're just going to put it, it's just option value, we're going to put it as zero in your financial
Maybe
plan.
It happens one day.
Maybe it happens.
Right. Okay. And maybe this is me because I am one of these business owners, right? I had the psyche. When somebody comes to me and says, no, we're going to take care of this asset. We care about this. Let's care and feed for this thing. Let's understand what it's worth. Let's don't just say, well, I don't know. I mean, there's actual ways to understand in your industry and your size. A banker like us, if we're in that industry, we can give you some valuation ranges that are conservative, financial valuations. And then, hey, if you do a market process, it could be twice that. You need to approach that and say, no, we are going to help you value that. Put some kind of discounted value to it. We're going to help you value it. And more importantly, steward it. Y'all steward all the investments I have in the stock market, but who is helping them think through all the macro things that are happening that could affect their industry, their business? And with the right team, with the advisor could be the funnel of all the content to say, hey, there's a roll-up going on in your space right now. So I think you have to address this, and it automatically differentiates you from other financial advisors. Oh, that's not, I don't know about that. Let's just leave it over to the side. No, this is a huge piece. We care. Even though I'm not getting paid for it, I care about it. I'm going to have you positioned, Shannon. Yeah. And they value that.
It really is. I was thinking about, I'm an advisor. It's a white sheet of paper. How do I start, thinking about this, having this conversation with my business owner clients or even prospects?
Right.
And the first thing that popped into my mind is like a simple SWOT analysis.
Yes.
Sit down with these companies and just do a simple SWOT analysis, because it starts your wheels spinning. And what I think is important for advisors, and I can say this as the president of RFG, you get so head down in your business. You get so head down on the day-to-day of running your company and thinking about your employees and building and your goals and your growth and your board, and that you just don't have the perspective. The blinders are on.
Absolutely.
And it's not until someone comes to you at the table and is like, no, we need to be proactive about thinking about the optionality on this business, about the diversification of your portfolio. This is a natural
It is
language.
it is a hook. And again, as a hound of God, like I am, a salesperson, I want to add value to every conversation. I'm going to tell you, this is what they're interested in. And even if you get a little pushback, I don't know, I don't want to count, say, no, we care about this asset because it's huge. And guess what else you can give them? The wonderful sales thing, hope. You can say, I see value in your baby. I work with a set of people that every day we see value. You have got a lot of value here. We need to really do some work here to understand, because this is for real. These businesses are worth a lot.
And I hope everybody caught it, because it's one of my favorite sayings of yours, Hound of God.
Oh, I'm sorry. Hey, when I started with IBM as a sales-centric company, I do not apologize for believing in something and evangelizing it, and I'm going to speak it from the mountaintops. If your client needs to hear this, there is so much value add. Yeah. I mean, and this is what's so exciting. This isn't gimmicky. It's not, this is unbelievable. Generational wealth matters. And do you know how many people, Shannon, I see that goof up here? Their private company, they mess up. They're not prepared, and $25, $50 million of value
just
vanishes. It literally vanishes because maybe they don't have the right succession plan. Yeah. Maybe they just haven't thought through, wait a second, have I documented my processes that show how I make cash flow? It's simple, but it is powerful. So again, honey hole, focus on it, have conversations with them, give them hope, and talk about their baby. Because again, we got to remember this. Most business owners, he's and she's, love the fact that this is their baby. They built it. It has their DNA. It has their blood. It has a life. It is not just like a
show up, punch the box.
Exactly. And when you give it legitimacy by saying it is important, it is your DNA, but it also, that's what makes it valuable.
Right.
So,
right. We had a great question just come in from the audience, which I think is a really valid point. All right, this all sounds amazing, but how, as a financial advisor, do I forge a relationship with an investment banker? How do I?
Okay. Oh, good. Okay, good. And I've got some examples of this, y'all, because I didn't really understand this, but I had one seek me out one time from Goldman Sachs.
Okay.
And Matt, who is now an investment banker, so I don't want to talk about this. He's moved to my industry, but he sought me out. He decided to focus in his prospecting, and they had to have 10 million in a minimum investable income. He decided to focus on digital media entrepreneurs, internet entrepreneurs. Okay. They were kind of young, tatted up, and he found me as a specialist in that space. He said, Zane, here's what I'm doing. Here's what I mine every day, this territory. He called me. He said, I'd like to partner with you. I'll get you in these things early to help value them if you'll give me some upfront education. So he came after me, and I thought, man, I got another person out there being an evangelist for me. I will support Matt with everything I could possibly give him to add value to his clients. So any investment banker worth their salt, and you almost say this, in niches, go to a niche you're interested in. If you like building materials, if you like restaurant concepts, manufacturing, get you a niche or two, because niches are important. Physicians, y'all, can I tell you something? We're selling physician practices like candy right now. Candy, because they built practices they used to couldn't sell. Now they're seeing they have value. Find you a niche. Hey, I help physicians. It gives you a differentiator. Find a banker that does that. There's not one of them that's not going to partner with you, because you're an additional resource for them to be out in the market speaking to it. So any banker worth their salt in a niche, if you're an advisor and you're hungry, they're going to work with you all day, every day to give you data, because you're out there bringing value. Doing seminars. You said this, like webinars, content. Silicon Y'all built my practice, an event that became an elite retreat, and it had a brand bigger than it really even was. People wanted to come, and then birds of a feather flock together, and then you get more people. And they say, boy, that person was in there. Well, that person came to your event, and they sold their company. So investment bankers are going to want to partner with financial advisors. It is a match made in heaven. If ever two professionals are teed up, it is an investment banker with private companies and a financial advisor. We do not step on each other's toes. Right. You're fine if we have a big liquidity event. Right. We love your people coming to us saying, we'll unlock all this value for you to put it in your, under management. Yeah. So it's a match, and I cannot figure out why, and I think this is a secret, and again, we're starting to develop this, why this isn't absolutely a thoughtful strategy with every practice builder.
Well, that's what we're trying to do.
Good.
Today.
Come on, let's do it.
Let's do it.
Yeah, I like it.
I mean, hearing you talk about it, it feels, and I got to wear my hat many chapters ago as an investment banker at a boutique investment bank. And I think that's why it was so important. Your perspective is so important, because it's not as if we're sitting here saying, okay, you need to go forge a relationship with Morgan Stanley. No. I mean, there are boutique investment banks on all kinds of different hyper specialties all over the country.
Yes. In regions and the geography and hyper specialty. That's it, Shannon. And that's where you're going to get focus. It's where you're going to get momentum. I say our two best friends are Mo and Menem, because once you do a deal together, once I refer you, you referred me one, and then it comes back and there's $30 million and then you're with them forever, then we're like, giddy up.
Let's do it again.
Yeah. And so you can have, I recommend like a monthly call. You check in. Here's what I'm doing. Here's who I'm talking to. Can you help me here? But I think there are so many niche bankers like us. I think it's something you could do immediately. I can't imagine any banker pushing back.
Right. How difficult do you think it would be for a financial advisor if they really get focused? And I love the idea. Let's take something we all know, like restaurant franchises. Talk about wealth creation in this country. Like, it's crazy. All right. So I'm a financial advisor. I'm interested in franchises, and I start doing research. How difficult is it for the advisor to start reading that and amassing that information to a way that would make sense for them to have a content strategy that then they could start pushing out to prospects? Like, how do they do that?
Yeah, great point. I think there's so much good data. I mean, just, with the internet, this stuff, there is so much good data on every industry where an advisor, the way an advisor thinks as a people helper, they could get the data in the context of the industry and the trends, what's going on, to where you could absolutely develop some core messaging around your industry to position yourself as this expert. Right. And so I don't think it's that hard. And basically, the fundamentals, don't worry about repackaging something. My silly book is bringing me, if I can tell this family talk on a webinar, people that just read that, and they now have a simple framework that every banker knows is common sense. Have a barrier to entry, have higher competitive margins, have a culture that you can really differentiate. But when you put it in context and you put that cookie on the bottom shelf and you let people digest it, it's magic. And so I don't think it's this hard retraining. I think you need to be intellectually curious about an industry, truly like those kind of people in that industry, and then go out there and make a difference. And just to be able to say, hey, I'm a financial advisor. I specialize with surgeons that, I specialize with surgeons. And a lot of them, we're seeing liquidity events all along the way, handing it over to their younger partners. That right there, okay, I'll have a conversation with you. Yep. And the point is having the right conversation with the right people. So, Shannon, I think they're equipped to do that with a little thought, a little preparation. I think you could get yourself equipped to do that by industry.
And, a little plug for our industry, because I think this is something advisors would be familiar with. This is what Dave DeVoe with DeVoe and Associates has really done for all of us, right? He takes the time to aggregate all this deal activity and really package it up. So advisors, which we have a succession crisis in our industry, right? So average age of a financial advisor is 62, 63, 64 years old. We have been stuck. I've now, lapping my 6th year on this side of the business. Yeah. For 6 years at 15% have structured a succession plan. We continue to have a succession crisis.
Perfect example.
And so Dave has really, taken our industry and become the expert. Now, granted, he's an investment banker, so he does more what you do. But I think it's an example of when you seek out the information, whether it's restaurant franchises or surgeons or, fill in the blank, whatever niche, like the data is there and people just need it to be packaged up for them so they can start digesting it. That's right. And I mean, you and I have such a simpatico on this, like he who or she who brings me knowledge.
I'm going to do business with you.
I'm going to do business with you.
And to be honest, and I probably had a chip on my shoulder about this, as an advisor, when you educate a client, if they don't do business with you, I kind of take offense sometimes. Like, wait a second, we did all the education, all the training, you know what I'm saying? Unless there's a real reason that you just didn't, and if it's your uncle you need to do business with, just tell me that up front. But I'm telling you, most people understand is if advisor educates me, spends the time and energy, they're an expert in my space, I'm going to reward you with my business.
You know, it's a little sidebar plug. Our next master class for advisors is with Daniel Crosby talking about behavioral finance. So that is the principle of reciprocity.
I love it. It's there. It's there. It's there. And if you can if you can give them this data and these gifts, and every time you're full of useful data, say, I want to be useful, that's going to feed their psyche. It's like, man, they've worked hard. I'm at least going to give them 15 million of this 30 million.
Yeah.
You know, seriously.
All right, so we're getting a bunch of questions because we've referenced the book a few times. So again, 17 reasons your company is not investment grade and what to do about it. You mentioned that you wrote this book really helping companies on that path over a 3-year period become prepared, become professionalized, institutionalized, get ready for the sale. All right, so tell us about this. Like, what, you know, advisors are going to get this as part of the seminar.
Yeah.
How could they use your book as a resource? Why did you create it? What do you think is the golden nugget that's in there?
Thank you for that question. It's one of the hardest things I ever did is finish this book. I said I was going to do it, and then, man, I struggled. I mean, it was hard. But here's why I did it. One day, I was working with a family, husband and wife, own a business. Their oldest son was now running it. They had a daughter that was married to an OBGYN, and then a younger son that had been in and out of drug rehab.
Yep.
And they came in, try to get them to figure out, okay, what are we going to do with this business? The older son wanted it, but he didn't have the money to buy it. The other two kids wanted to make sure it was in their trust fund, and mom wanted to protect Thanksgiving. I went in, and we did the homework and found out, oh, no, this company's making $7 million a year in EBITDA, and it's not sellable. Because of the risk profile, the customer concentration, we had to go in and tell this family, everybody, keep the business, work very hard in it as a cash cow, take that money and give it to your wealth manager and put it in apartment complexes because your business has no terminal value.
Wow.
At that day, I said, I'm going to write this in the negative sense. This is the reason you might be believing a lie, that your company is your retirement, that you're going to get this big check. So, Shannon, I wanted to write it to give a simple framework where you could ask yourself questions. Am I investment grade? And these are just pattern recognition after sitting in thousands of management meetings with private equity firms, strategic buyers, with business owners, looking at patterns and saying, you know what? This barrier to entry is important. If anybody can come in your industry and start a business and just hire your salesperson, your company's not worth anything. So maximize cash. So I wrote it because I have a passion for entrepreneurs to know this and also to give hope to people. Like I said, I have built an institutional grade company. I had no idea somebody would pay me for my processes, my systems, and my cultures $50 million. So that's the reason I wrote it. And I'm going to tell you, y'all, as a product of this, at my age, I did it. Can I tell you the leads I get from this? It's crazy. And it's simple. You know, you read it, you'll say, thank you, Captain Obvious. But guess what? I wrote it down and I packaged it. So and that's what I think you're doing.
Yeah.
Packaging and presentation creates value. So as a practice builder, your advisory firm, the way you package your message to your persona, your target market, which I'm making a strong case, I think, you are too, is the business owner, is the difference in building a massive practice or not, I think.
All right, so what would be, you know, of the 17 reasons, is it barrier to entry, or what's one of the 17 reasons? It's just like
it just comes out.
It just
all
hits
right,
companies in the gut.
I'm just going to say it hits you in the gut, and it hits me in the gut because the business we're in and the business y'all are in, you ought to do a backflip. All revenue is not created equal. People say, what will my company trade for? Multiple of EBITDA, multiple of revenue, multiple of gross margin, none of the above. It's going to trade for a multiple of each of your revenue streams. And if those revenue streams are one time, like I'm a contractor, I build a building, those aren't worth much. If they're reoccurring and you can prove, like with your clients, it's sticky, they pay you to manage this money, that revenue stream is worth 6, 7, 8, 9, 10 times more than a one-time revenue stream. So it is.
Say that one more time, because everybody on this call is a financial advisor.
Advisor.
Y'all
have got recurring revenue, y'all. You take it out of the account to manage the money. It just happens like Netflix, like a utility. Other companies get paid for projects. That's not worth much. People say, what does a contractor trade for 3 times EBITDA? Barely. and a software
SaaS
company trades for 15 times revenue and they're not profitable because of the nature of that recurring revenue and high margin. Once you get that customer, that's high margin, repeatability. So the number one thing is the nature of your revenue streams. How predictable are they? What are the gross margins? Do they keep on happening? Do you have a high net promoter score where people don't churn? And that's the reason y'all's business model as an advisor, when you go capture a good client and you keep them happy, that's worth a fortune. That was good stuff, y'all.
That
I'm
was
sorry.
good stuff.
Yeah.
Well, and it's fun because you've obviously been on this journey of building RFG 2.0, and that's
y'all done it.
It sits at the core. We believe so passionately in creating enterprise value for advisors because they have this really desirable business model.
And Shannon, stop right there, because I have so loved being on this journey because y'all built a 17 Reasons platform for advisors to come on with this unbelievable business model to bring on clients, keep them happy, serve them, have innovation with tech. Tech's one of the things, right? You've got to have tech. You have built this, and y'all can have confidence. Advisors can have confidence that you're building your house in a neighborhood that's a 17 Reasons neighborhood. You've got something of value. There is lasting value in these practices.
I mean, this is why this
lights my
topic,
candle.
it really does. This is why this topic is so exciting, is that you think about, as an advisor, positioning yourself with business owners, coming up that learning curve, really becoming comfortable and conversant in talking with business owners. I love that, just as even a stepping stone to ignite the conversation. What are the sources of your revenue? People love their children. They'll talk about their kids all day long. I'll talk about my 3 kids all day long.
That's right.
People love their companies like their children. They will talk about them all day long. You want to talk about RFG? Call me.
Yeah.
I'll talk about it all day long.
That's right.
So you get these conversations when you're prospecting with business owners. Get into the weeds on this. Don't be afraid of it.
No.
Talk to me about your company.
And
Talk to me
Shannon,
about the source
we
of
all
revenue.
know this as good business developers. It's a
Hounds of
conversation.
God.
It's a conversation. If y'all can be in the conversation, and the more they learn about you, about the advisor, about RFG, you're going to win them.
Or
the key
any
is
advisor, not even RFG, just any
stay
advisor.
in the conversation. And the goal of that, whatever you're trying to do, date somebody or whatever, is talk about them, talk about something that's interesting to them, children, business. And you've got a topic with business owners they're interested in. They can't talk about it with many people. They're curious. It is the topic.
Yep.
Stay on it.
Yeah. All right. So we're going to break a little news here.
Okay.
Talk to us about the tool, the new valuation tool that you've been working on for, because I think this will be a
long time.
This is it's been in your lab, in your creative lab for a long time.
Yes.
We're really excited about what this could mean for advisors. So
I love it. And Shannon, I'm thinking just as we're talking, because this is all new, right?
Right. This is brand new, baby,
this could be
breaking
something
news.
we could do together. Trying to drink my own Kool-Aid and say, okay, how do we provide the content to these business owners when we're at the table, when they're ready? Over and over, people say, help me.
How much
How do
does
we
my
do
company
it?
work?
Yeah, how much company work? Hey, could you give us consulting? Could you? And we're not in a position to do consulting very easily, right? Way before making my company
You
better.
got to eat every day.
Exactly. But I don't want to give that away to some other person that does that might have another banker, right? And here's the beautiful news too. Let me say this, because I wanted to say, when you as an advisor, we talked about have a relationship with a banker, anytime you bring that banker in a deal, they put in their, obviously in their deal cloud, their salesman.
Yeah.
This is where I got that lead.
Yep.
Rick brought me 2 very good leads recently.
Yep.
Guess whose name's next to that? Do you think they'll ever know there's anybody else besides, for tax, for estate planning than y'all? No, that would be terrible, right? So just know, anytime you bring any of these banks to lead, your name's on it for liquidity. Nobody else is going to get in there.
Right.
They're going to nurture it for you. So I needed a way to nurture this. People were saying, help me. So we invested a lot of money, and it's taken us a while, about 3 years. But we just announced our latest version of an assessment, and it's based on the framework of my business, of my book, that, give me a quick assessment that's hard-hitting, that we can quickly take your blood, Just like your doctor says, here's your lipids, here's your cholesterol, here's the size of your lipids, all this compared to other 56-year-old white guys in the United States. We've developed this by industry. And so right now we've got 4 industries, and some of them, like manufacturing is a broad industry. Restaurants, four-wall economics We've got, of course, SaaS companies. We're doing it for business services, physician practices. Some of these hot areas where that person can sit down, it takes about 25 minutes, but it's a branching technology. We had software engineers build it with all our data about there, and it will come back, give them a prescriptive report that says, here are the areas you grade well against your cohort. Yeah. Here are the areas you don't grade so well. And here's some advice. So it's a prescriptive report, but guess what it's for? A conversation. Right. So I'll come and say, hey, you take this assessment, and I was going to charge for it because when you charge for stuff, people take it seriously. The more we've seen this, for an advisor, in my opinion, to sit down with a business and say, hey, let's walk through this. Yeah. Unbelievable. So that's what we're doing, and it's really the value assessment to say, what do you need to work on? What are the enhancers, detractors? Are you investment grade? Right. And gives them actionable to-dos, like your net promoter score, all those things we talk about. And like DeVoe could do it for y'all. He could build the perfect assessment that you could tell really quickly. Is this?
I think he does that.
Yeah, I'm sure he does. He ought to. So anyway, that's what it is.
He charges for it.
Yeah. Well, maybe we need to charge for it. But hey, thank you for asking about that.
I mean,
that's the reason we did it, to have that conversation.
It's really, really exciting. Yeah. And I'm going to give a plug, and this is like so fortuitous on the heels of this conversation, and we'll also archive this along with this, which you guys are preparing to have a webinar here December 8th, so just about a week away, titled Preparing Your Business for a Sale. So this is going to be led by bankers at your firm. You're going to hit on these verticals. It dovetails into this assessment tool. So again, preparing your business for a sale. We'll share that information with everyone. Shannon. But it's just, it really is knitting to, it's such a unique time. I mean, do you think in your 20 plus years as an investment banker, there has ever been a richer time in the industry for liquidity creation?
I do not. There's so much capital. There's so many private equity firms. There's so many people coming downstream to invest money in smaller companies. And then owners are getting more educated to the options. It is a true honey hole. And it's not just 1 year. Right. We have got, I believe, 15, 20 years. And it's the baby boomers, it's the wealth, it's what's going on in the spaces, it's the roll-up mentality to create value by investors, it's the private equity allocation that people are having to put their money in private companies. Y'all, it is I believe, the perfect situation.
And I also think there's an interesting, sidebar trend to all that, which is people are looking at the public markets and feeling increasingly like there's a disconnect, and is it overvalued? Like, what's going on there? So I feel like that is going to continue to fuel this appetite for investing in private companies.
It is.
The
demand is there.
This is lightning in a bottle.
It is absolutely right. And all you need, if there's an investment grade company, there are so many options for that owner. Make sure they understand it.
All right. So we've got another great question, and it's just talking about, niches. Is there any work that's been done specifically around logistics?
Oh, great point. Well, logistics is a tech-enabled services business. So absolutely, the technology around brokers, shipping brokers, is unbelievable, and even trucking companies, even physical less-than-load trucks and full load trucks. That is absolutely an unbelievable niche. I don't have an assessment for it yet, but that is a hot niche with a lot of data. Yeah. And our bankers can provide that. We subscribe to so much. Like if you have a advisor that wants to talk to a banker and get some data, we're glad to do that.
Let's do it.
Great question.
All right, we're coming up on the end of an hour. I mean, it flies by.
Good gracious.
We could literally do this all day long.
Good gracious. This was fun to me. Yeah.
All right, so we're going to end every RFG Masterclass for advisors with an actionable item for today. You walk away from this webinar. What is the number one thing an advisor should do?
I think you should find a M&A advisor, an investment banker that you can build a relationship with. I would start by doing that because that's where good things happen.
There you have it. Zane, thank you so much.
Thank you, Shannon. You're fun.
You're fun.
Yeah.
I can't imagine a better way to kick off this new education series, RFG MasterClass for advisors. We've got the next two already teed up. So we'll have Daniel Crosby on January the 12th here in the podcast studio. New year, new you, talking about behavioral finance. And then in March, February or March, we're working on dates. It is going to be a powerhouse of marketing, advisor marketing. So Kelly Waltrich, she is obviously wealthmanagement.com Chief Marketing Officer of the Year when she was at Orion. That woman knows the ins and outs. She's been at InvestNet. She obviously has now started her own company intentionally. And then Tina Powell, who is the CEO founder of C-Suite Social Media and behind all the great work that RFG does in social media. So we're going to have a little powwow. We're going to have a girls powwow.
That's awesome.
Power chat about marketing. So we've got a lot planned for 2021. I really, truly thank you so much for being here.
Thank you, Shannon. We love RFG, and y'all go build amazing practices. Thank you.
Thank you.
Thank you for tuning in to War Room Huddle. War Room Huddle is a production of RFG Advisory, a leading innovator in the wealth management industry. To learn more about RFG Advisory, head on over to rfgadvisory.com and subscribe wherever you listen to this podcast. We look forward to seeing you on the next episode of War Room Huddle.